Is US heading towards recession? The biggest question looming all over the world at this point of time. I will try to resolve this query in this video. Hi, this is Anik Mitra, a SEBI registered investment advisor. Just before start, I would like to give a declaration that this video is not made for any buy or sell recommendation in the stock market. So let's begin. So firstly, we would like to understand what is recession. Technically, a recession is a significant decline in economic activity that lasts for months or even years. Now, economists say when nation's economy experiences negative growth in GDP, rising levels of unemployment, falling retail sales, and contracting measures of income and manufacturing for an extended period of time, then it is recession. But there is a specific rule of thumb in US. In 1974, economist Julius Siskin came up with a rule of thumb. According to him, the key point what he highlighted was 2 consecutive quarters of negative GDP growth. So we will try to assess in this video on various parameters what is mentioned in recession. So firstly, we will check the GDP growth rate. GDP growth rate in April quarter was negative, minus 1.6. So the problem is the next quarter, that is June quarter, which is going to be declared in another few days. So this will resolve all of the queries regarding recession, whether US will be in recession. So if June quarter gives a negative growth, then US will be in recession technically. We have seen a couple of quarters of recession during, couple of quarters of negative GDP growth during pandemic. In April 20, there was minus 5.1% of negative GDP growth, and next quarter, that is July 20, there was again 31.2% of negative GDP growth in US. But it was followed by a very sharp recovery. October 20, US recovered 33.8% in its GDP growth rate. So GDP growth rate is raising the question of recession very much. Next one I was referring regarding consumer sentiment index, CCI. Michigan consumer sentiment index is continuously going down since July 21, and especially after March 21, we have seen some significant fall in the consumer sentiment. So this indicator is also saying some challenge to the economy. If we check initial jobless claim, then there is no such indication of recession. If we check during March 2020 to August 2020, this period, US jobless claim sharply rose, but afterwards it has again settled down. So you can see this spike here, right? This is the period of 2020 March to August 2020. So afterwards it settled down, and now it is again somewhere nearby bottom level. So jobless claim is at the lower level. So it does not specify any risk of recession as per this particular data, initial jobless claim. Now we will check inflation. Inflation is in news for a quite some time in US, right? From, if we check March 21 onwards, US inflation has started rising. In March it was 2.6%. This was March 21 I'm referring. Then April it was 4.2%, in May it was 5%. And let me mention here, it happened due to various measures US has taken to come out of pandemic. So it increases money flow in the system. People had lots of money to spend in their hand in the post-pandemic period, and that basically initiated this inflation. When US inflation, average US inflation is somewhere 2.2%. So for a quite long time it was hovering below 2%. Suddenly it came up from 1.7, 2.6, and then straightway 5%, and consistently sustaining above 5% from May 21. So it was doing in the same way for another few months. From October we have seen some 6.2%, November 6.8%, and December 7%. US inflation was quite high. In February 24th, Russia invaded Ukraine. Afterwards, gas prices in Europe has gone up. Food inflation has gone up in US due to supply shortage. So altogether, US inflation touched 8.5%. So in March 2022, it was 8.5%, April 2022, 8.3%, and lastly in May 2022, it was 8.6%. So this is told that it is 40 years high inflation in US. So this is a point of concern. So negative GDP growth along with this rising inflation level is a concern in US. Next point, we discussed about personal income. Personal income, if we check, in Q1 FY21, rather Q1 CY21, this is calendar year 2021, uh, personal income level was quite high, above 21,800 billion dollars. But afterwards, in Q2, it has drastically came down. This was Q2 means it has already started absorbing impact of Ukraine war. Then it started again gradually rising, and by Q1 CY22 it has uh, gone up but significantly down from Q1 CY21. So if we check personal disposable personal income, then again Q1 CY22 uh, disposable personal income is somewhere flat, we can say, compared to last 3 quarters. But if we compare it with Q1 CY21, then disposable personal income is significantly lower. Still, if we consider this personal income thing, then it is not that much challenging, considering uh, last 3 quarters of consistent recovering personal income status. Next one is retail sales. We mentioned in the definition, or rather explanation in the definition, US retail sales growth month on month figure, uh, which was continuously coming down from February 22, and in May it was negative 0.3%. So falling retail sales. So this is basically retail sales growth rate month on month basis. So this time minus 0.3% retail sales, that is degrowth in retail sales, uh, obviously raising a question in favor of recession. Next one is unemployment rate. Like we discussed the claim, jobless claim. Now the reverse is unemployment rate. Unemployment rate is not a concern. It is still at the bottom level. 3.6 is the unemployment rate, 3.6% in US. That is constant from March, April, and May. We have witnessed 3.6% of unemployment rate in US, which is at the bottom level at this point of time. So this is not a concern. Next one is interest rate. US Fed is very optimistic to fight inflation. They are consistently rising interest rate to fight inflation. From March 2022, US Fed has come up. Before that, interest rate was 0.08%. Afterwards, from uh, March 2022, they have started rising interest rate from 0.08% to 0.2, then 0.33, then 0.77 in May, and in lastly in July it is 1.21%. So Fed is making a crunch of money supply to fight inflation in US economy. Now we will go into little breakup of inflation, which is basically driving this inflation. So 8.6% is the current inflation we have already discussed. Now if we go to the breakup, then food item 10.1% inflation. This is 1 year from May 21 to May 2022. So 10.1% food inflation. This is annualized, right? Then meats, poultry, fish and eggs 14.2%, chicken 17.4%, eggs 32.2%, dairy products 11.8%, milk 15.9%, coffee 15.3%. So all food items are showing the path of inflation. Energy cost has drastically gone up. It has gone up even before Ukraine war, and post-Ukraine war energy crisis is all over the Europe and US. Although US is self-sufficient and one of the largest exporter, still uh, due to global energy crisis, energy prices has gone up globally, so US energy cost has also gone up simultaneously. So this time this was 34.6% inflation from energy. If we check hotels and motels, then it is 22.2%, health insurance 13.8%, public transportation as crude price has gone up, and gas prices has also gone up. So public transportation has gone up 26.3%, and airline fare obviously, like as ATF has gone up, so 37.8% rise in airlines fare. So altogether these are the drivers of inflation in US. So net inflation in US as announced in May 2022 was 8.6%. This is 40 years high. Now, apart from these traditional indicators, there are some advanced indicators in the market which economists keep on tracking. The Conference Board Leading Indicator Index (LEI), an inverted yield curve. We will discuss all these stuffs. Decline in consumer confidence, rising unemployment. So these are the leading indicators of recession. Now we have already checked consumer confidence. This is continuously going down. Rising unemployment is not there. Till this point of time, there is no rising unemployment. Now we will check this leading indicator, Conference Board Leading Economic Index (LEI). So LEI for US has decreased by 0.4% in May 2022 to 118.3. So base is 2016 100, following a 0.4% decline in April 2022. So continuously 2 quarters of decrease in LEI in May and in April by 0.4% respectively. But we need to keep in mind that LEI was continuously rising, and it is, although it has retreated from its high for last couple of last couple of months, still it is somewhere very near to its historic high and currently hovering near a historic high. So this indicator is not showing any sign of recession. It may be very early stage, it may come down going forward, but at this point of time it is not showing any sign of inflation. Now inverted yield curve. What is inverted yield curve? This is basically when a short-term bond yield goes higher than long-term bond yield, then it is inverted yield curve. Means if you find out the spread, then spread becomes negative because 3 years yield is higher than 10 years yield. The 3 years and 10 years bond yield spread has gone into negative in June 5th of June 2022. For the first time post April 2022, it has gone negative. And this time, this was consistently persisting in the negative level. In July 3, there was still this index, this yield is, the spread of yield is negative. So obviously this is a precursor of recession. If we check crude price, crude has lots of things to do in inflation. So crude price is obviously higher, but on Thursday, last Thursday, crude price has gone below 100 US dollar, giving some relief to some of the sectors. If we check natural gas prices, yes, natural gas prices has suddenly gone up a lot post Ukraine war, but recently it has corrected significantly from its high. So giving some relief, some hope to many of the sectors who are very much dependent on these gas prices. Now the question is it a recession or no recession? There are lots of factors in favor of recession, a few factors are against recession. Now, negative growth rate in GDP is in favor of recession. High inflation is in favor of recession. Consumer confidence index is in favor of recession. Retail sales is going down, so it is also in favor of recession, and inverted yield curve. So altogether, these are the factors in favor of recession. And factors which are against recession, that is unemployment rate, we are at the bottom level, means US is at the bottom level. Personal income, there is not very big change in the personal income, although it is lower than last year first quarter. And leading economic index, although it has turned negative means turned around little bit from its high, still it is very much at its high. So more factors are in favor of recession and less factors are against recession. Now all eyes on July GDP rate of US, right? So what is going to happen, what is going to come, it's not in our hand. Let's finger cross. But it's recession. Atlanta Fed's GDP Now measure, which tracks economic data in real time and adjusts continuously, sees second quarter output to contract by 2.1%. So negative 2.1%, followed by 1.6% in the first quarter. So July quarter is likely to give negative 2.1% GDP growth. So two consecutive quarters of negative GDP growth means technically it is recession. What will happen if there is recession? No, it's not end of the world. We will check some history. What happened earlier? In COVID-19 recession, it lasted for 2 months according to some economists from February 2022. We have seen negative GDP growth in April quarter and July quarter during recession. So it was short lasting. There was a V-shaped recovery in the economy. Great Depression, December 2007 to July 2009. So it is almost little more than 1.5 years, maybe one year 7 months. So this was Great Recession. Then dot-com recession, March 2001 to November 2001. It was somewhere around 7 months, 6-7 months. Gulf War recession, July 1990 to March 1991. So it was again 7-8 months. So again, it's not end of the world. So it There may be some slowdown for 6-8 months, but everything will again uh, come back to its previous level, and things will started falling in line over the period of time. For that, we have to keep patience. Now we will do some impact analysis. Although the impact we assess in stock indices, but we need to keep on mind that this stock market index itself is a leading indicator of the economy. So Dow Jones Industrial Index was continuously falling for a few months. It made its high during early January 2022. Afterwards, it has started correcting, and gradually it has come up, although lots of volatilities are there. So it's not a unidirectional fall in the market. There is a zigzag movement, and trend is clearly downward at this point of time. Another one indicator which is very important to judge stock market index, that is volatility indicator. The US CBOE VIX, which was very much volatile, which was showing some big movement during that Ukraine war, just after the Ukraine war, from late February to early March, started squeezing. So this is not a good sign, because often we have seen squeezing charts are indication of breakout either side, either breakout or breakdown, either side. If it breaks down, that means volatility has gone and market has stabilized. But if it goes up, if it break out, then it can be very dangerous for the market. So we don't know what will happen. We can guess. So uh, with this, we can say it's time to be cautious. That's it. Now, impact on India. Is India more resilient? Yes. Now, it is said, economists are saying that India is more or less resilient to US shocks now. Industries which are not much exposed in US will do good, will continue to do good in coming days, despite recession in US, because input costs has come down. It has shaded some points from its high, so this is a good sign. Metal prices has corrected. Crude and gas prices has also corrected up to a certain extent. So this is a good sign. This may give some relief to many of the industries, many of the sectors. Apart from that, India consumer story is intact. Government has lots of thrust. Make in India program is there. Government has announced PLI schemes in various sectors. Uh, there are thrust in many more sectors in India, which can play in favor of India. However, the systematic risk cannot be ruled out. Slowdown in economic activity as a ripple effect of US cannot be ruled out at this point of time. It is possible, so it's time to be cautious. So it's an alert. We can't say it will be recession. We can't say if there is recession, there will not be any impact. And if there is recession, it's not end of the world. So it's time to be cautious from all front. That was it. Thank you for watching my video. I will again come up some analytical video in next few days. Thank you very much.